Hello everyone, good afternoon. The rebound since the beginning of the year has been very impressive on equity markets. We believe, however, that it's getting close to an exhaustion point and can enter a few weeks of correction. Today, we will look at it in more detail and cross assets with our fingraphs.com platform. We'll start with the S&P 500 with this investor's view, which shows three graphs: a weekly graph for the perspective over the next 2 to 4 quarters, a daily graph for the perspective over the next few months, and an hourly graph for a perspective over the next few weeks. As you can see, the weekly graph for now is still in a bear trend, which started with the tops in October on the S&P 500, but it is just a corrective bear, meaning it's possibly a correction before a new uptrend. And that correction bear, as you can see, has reached our corrective targets to the downside, which actually served as quite good support. And since then, prices have been rebounding. So for now, we would still be in that correction, but that correction is not an impulsive move to the downside yet. On the daily graph, we could see the uptrend was rapidly reinstated. It is now in an impulsive target again, an impulsive target which could eventually revisit last year's highs. This won't happen in a week, but over the next few months, this is possible. For now, our risk index is still very, very low and moving up. So we would expect that the uptrend on US equities could possibly last into mid-year, possibly the summer. In the meantime, our envelopes are touching each other and it looks a bit exaggerated. This is what we could see here on our hourly graphs. Our hourly graphs have been moving up, yet they have reached our impulsive targets to the upside, which means that the short-term move seems exhausted. Our envelopes are touching each other, and our risk index is overbought. Let's look at it on a zoom view. So this is the hourly chart again, and as you could see, targets pretty much reached, envelopes touching each other, and the risk index is in the red. Usually such situations should bring 2 or 3 weeks of consolidation to the downside, possibly back to the lower end of the envelope, so possibly towards 650 as a support. We'll then move on to European markets. European markets have been weak since the fourth quarter 2017. Hence, they are already in a downtrend. And for now, that downtrend doesn't seem over yet because the risk index is still pretty much in the middle of the range. That said, it's turning up and could also enter an intermediate correction to the upside. As we can see, the daily graph has moved up also quite nicely, but not as strongly as the S&P 500. It has now reached our corrective targets to the upside. They will serve as resistance over the next few weeks, which means that you'll probably see some work around these levels and possibly with some retracement before the trend is reinstated to the upside. Ultimately, we'll have to move above the higher end of this zone, around 3,300, to potentially reaccelerate up towards the highs that we saw last year. The risk index was very much oversold in December and hence the bounce. So for now, we've had a very nice first move, but we would expect a bit of work over the next few weeks. As we can see with the hourly graph, which we will zoom in now, what we can see is that our envelopes have already touched each other twice, and our impulsive targets to the upside are pretty much attained. So we don't expect much more potential over the short one for the for the Euro Stoxx 50 index. What we can see here is that it's not quite an overbought zone yet, but it should come there over the next few days. So also here we would expect a reversal, possibly this week, leading into 2 or 3 weeks of consolidation, probably down to the bottom end of our envelope, towards 3,125, 3,100. Now we look at the euro dollar. Now the euro dollar has reinstated its downtrend, and our impulsive targets to the downside are showing very aggressive targets below parity. Well, that's not for today. That's probably for next year. And in the meantime, we've moved down pretty much towards a zone where we see a lot of support. We will see them in more detail looking at our daily graph. And our daily graph, as you can see, has reached its impulsive targets to the downside. So although it is still downtrending, we believe that over the next few months, the downside potential is there, but probably not that compelling. We would see it somewhere between 112 and 110. Now, our risk index has bounced nicely towards the end of last year, early this year, but it's still now reinstating its downtrend and will probably go meet its oversold zone possibly towards mid and March. So we expect a bit more downside here, but the move doesn't have that much a risk left in it. So another month or so. Now if we look at the hourly graph, we'll zoom in to the hourly chart. We can see that over the next few weeks, we do have that target somewhere between 112 and 111, that we probably made an intermediate low late last week with our oscillators, which were quite oversold, and we're currently seeing a bounce. We expect this bounce to die out possibly during this week in the high 113s, low 114s, before the downtrend is reinstated for another month or so. Now we look at dollar yen. Dollar yen is different. Dollar yen is basically very much a risk on, risk off a barometer. And what we can see is that it has been in the range for the last 2 years, never really made it into impulsive territory to the upside, and is now, in our view, at risk of seeing another retest down. We don't expect it to move lower than it was back in December, where it flash crashed down to below 105. But we do expect some retracement here, especially that our daily trend is still heading quite aggressively down. The targets we show here are in the 106, 104 range, and we believe that the risk is possibly towards the upper end, so towards 106. If you could see, the move up we've had since December does seem pretty much counter-trend for now. Looking at the hourly, we'll zoom into the hourly graph, and the hourly graph has had quite a nice move up over the next few weeks. It is also getting towards its impulsive targets to the upside. Our envelopes are touching each other, so we would consider that it's reaching exhaustion. Our risk index is also very much overbought, could still retest up over the next few days, but is slowly getting there. So also here we would expect some retracement over the next few weeks, possibly down to the envelope towards the 109, 109.20 levels. And if we do break below them, then towards our daily targets in the 106, 107. Now looking at the cross, Euro-Yen, it's interesting, as it is also possibly the best risk-on, risk-off indicator in the currency space. We can see that it's still slightly downtrending on a weekly basis. The risk index is trying to move up a bit over the last month or so, but in essence, even if we do get a correction up during the first few months of this year, it is still a long-term downtrend. The daily is still heading lower. It did had an intermediate low here as our envelopes touch each other to the downside and our risk index briefly went into oversold. It has since been bouncing, but we do not think this downtrend is over. And we would still have some potential to the downside towards the 122.60, possibly down to the 119.50 levels. So still some potential to the downside over the next month or so. Looking at the hourly chart, it is basically a weaker version of the charts we saw previously. It is still in an uptrend, does still have some potential to retest up towards its highs. The risk index was quite low last week, and we can see that provoked a short acceleration to the upside. That said, we believe that a retest that could materialize over the next few days above 125, possibly towards 126, would be an interesting opportunity to short the pair again. At the same time, we look at gold. Gold has also been in a flattish consolidation for the last 2 years in a range. It has been moving up very nicely since this fall on risk-off considerations. We can see that this move doesn't seem quite over yet. We believe that it's probably another few weeks, possibly a month to go, with targets in the 1340s, 1390s, which are still possible. The risk index is not quite in the red yet, so the move doesn't seem finished yet. If we look at the hourly graph, we can see that we've reached a point of breakout, that our envelopes are touching each other, that our targets are pretty much done, and that our risk index is in the overbought zone. So we could expect a bit of retracement over the next few days, but in general, we will probably follow the trend that we have here on the daily, which doesn't seem over yet. And we would see, indeed, another 2 or 3 weeks maybe of uptrend in above 350 levels. The risk index also is not quite overbought yet. Finally, we look at oil as another commodity, a more cyclical commodity. It corrected down on the weekly graph quite aggressively with equity markets. It's reached its corrective targets to the downside, so has found support, is now rebounding. The first move up has been quite nice, but now it's meeting the resistance of our corrective targets to the upside on the daily graph. It could still push towards the high 60s, 70s, but it's going to be more difficult as time progresses over the next few weeks. And we would expect also some kind of a retracement into late February, early March. Shorter term, we could see that we are overbought. That our impulsive targets to the upside have been met. There's possibly another $1 or $2 potential, and that it seems like this trend could continue a while longer over the next few days, but also here expect some retracement into early March. Thank you very much and have a very good week.